Clinic at WashU Law School, and today we're going to talk about tax updates, what is changing and what is happening in the world of taxes this year. Okay. So here are the topics that we're going to go through. My goal is to talk for probably the next 40-45 minutes, and I'll make sure I save plenty of time at the end for questions. But also, please feel free to interrupt with questions as we go on. Both, it's more fun for everyone because you break up my monologue, and it gives me a chance to catch my breath. So I personally am very appreciative. So please, I welcome your questions. All right. One disclaimer that I want to give before we get started, what am I? Is that this presentation is general information. It is not legal advice. Your situation may differ from what I present, what is common, or what is typical. So just one disclaimer before we get started. All right, so as Liz said, I am from the Low Income Taxpayer Clinic at the Washington University School of Law. Oh, sorry, that got changed a little bit. Our clinic works with qualifying low-income individuals who are having disputes with the IRS, and we provide free legal assistance. Free has an asterisk up there because while we do not charge for our legal time, for our services, there are some certain filing fees or court fees that we may ask our clients to cover. We work with clients who have a wide range of disputes, generally in the areas of appeals, audits, collections, or federal tax litigation, but there are other issues we handle as well. What this tends to look like is a client might come to us because, for example, they've received a notice from the IRS, and that notice says they owe more money than they thought they did, and they're not sure why that happened. Or they might get a notice that they owe more than they can afford to pay. Maybe then they can afford to pay now, or maybe that they're concerned they're ever going to be able to afford to pay. The IRS may be threatening to garnish their wages, to levy their property, to take their home, and they're trying to understand, what are my options? How am I going to get out from under this? We work with clients who need help responding to audits, including audits of the Earned Income Tax Credit or the Child Tax Credit. We work with clients who need assistance filing tax court petitions, who need help with injured spouse relief, innocent spouse relief. The world is very large, but the one thing that we unfortunately are not able to do is we do not file tax returns. I promise you, you do not want me filing your tax return. There are great accountants and great specialists who do this, but that's not our area of expertise. Our clients make less than 250% of the federal poverty guidelines, which for a family of 4 this year, just over $80,000. Take your time. Okay, so here we go. One of the clients that I wanted to highlight that we're very proud to have worked with was a woman, Katie. I'm able to talk about her story, and this is a photo of her because Katie agreed to work with the Missouri Bar Association to produce a video about her case and about our work on that case. And so this is a photo of her in her home. Katie received some very devastating medical news. It meant that she wouldn't be able to work full-time going forwards. And so what she decided to do was withdraw money from her retirement account and use it to purchase her home. Very reasonable. When she did this transaction, when she withdrew the money, not enough got set aside for taxes. So the IRS began writing her letters, telling her that she owed taxes. She had this tax liability. This went on and on. As time went on, the debt grew with fees and interest and everything. It just accumulated until by the end, Katie owed the IRS over $65,000. The IRS had put a lien on her home, the same home that she had purchased with this money. There was the potential that her Social Security might get garnished. And so she was able to come to our clinic. The clinic drafted what's called an offer in compromise. This is a way that certain taxpayers can settle tax debts with the IRS, and in fact make a settlement agreement. And the clinic was able to settle her debts down from $65,000 to a single dollar and clear the case. So this is one of the cases that we're very proud to have worked on, but in general, it's wonderfully rewarding work. Often when people come to us and they're having difficulties with the IRS, it can be really scary. It is confusing. People might not know what they're supposed to do, what they can do, what their options are. And so getting to work one-on-one with our clients and help them through that process it's a really rewarding work. It's something we enjoy doing. Okay. All right. Let's get down now to federal income taxes, everyone's favorite topic. So, if you wouldn't mind. So federal income taxes are the U.S. government's most important source of tax revenue. This is a pie chart from the Tax Foundation. The Tax Foundation does amazing work on tax policy, research, and publishing data that shows the different forms of tax revenue the U.S. government brought in 2022. Nearly half of it came from individual taxes. So it is something that it's a very important source of revenue for the U.S. government. It's almost equivalent to property, corporate, and social insurance taxes combined. Okay. So we are right now getting into the heart of filing season. I hope you all are as excited about that as I am. But one of the great things the IRS does is it's every week or every other week, they publish updates on where they are in the filing process. And so I pulled these numbers. These are from the end of last tax year. So last filing season ended April 15th, 2024. At that time last year, the IRS had processed over 139 million returns. About 86 million of those returns resulted in a refund. The U.S. government issued just under $250 billion in refunds back to taxpayers, and the average refund a little under $3,000, $2,850. So we are keeping an eye on what these numbers are looking like this tax year. So far, it looks like we may be off to a slower start than last tax year, but likely those will pick up. So we'll kind of be keeping an eye on those to see how those returns get processed in the coming weeks. So then this gets to lead me to one of my favorite topics. How does the U.S. government actually calculate how much you owe in federal income taxes? And they do it using this fun flow chart. So we're going to walk through this, and I apologize. There's a ton of slide skips as we go through this. So the first thing that they're going to do is they're going to start with your total income. And then if you go forward one more, from that total income, we're going to make certain adjustments to your income. There's a whole host of adjustments that may be applicable to each taxpayer. These are things like if you pay certain types of self-employment tax, student loan interest. Certain school teachers who make expenses for their classroom with their own money can adjust their income in certain circumstances to cover those costs. There's a large variety of them. But once you have finished making your adjustments to your income, you then have your aptly named adjusted gross income. From your adjusted gross income, most taxpayers are able to make a deduction. 95% of taxpayers in Missouri will opt to do what's called the standard deduction. This is a pre-calculated amount of money that you remove before we start calculating your tax bill. It's a number, it's pre-calculated by the U.S. government. Many people can take it, pretty much no questions asked. For some people, though, they might decide rather than using the standard deduction, I want to make my own custom one, a deduction that exactly reflects my financial situation, and that's known as itemizing. When you itemize, you go through all the available deductions that might apply to you, you add up all those items, and at the end you get your itemized deduction. Again, it applies to relatively few people, but it is something that for certain taxpayers is advantageous. All right. Once we get your taxable income, the U.S. government is going to do some super fun math that we're going to briefly walk through to get to your tax due, or your actual tax bill. So if you go to the next slide, I have two charts up here on the slide. The one on the right is all of the tax brackets for this coming tax year. They show that our tax rates range between 10% and 37%, and then across the top are the different filing statuses. So depending on how you file, different amounts of money will fall into each one of those tax brackets. So there's an example worked out on the left-hand side. This is for a single taxpayer who, after they've adjusted their income, after they've taken their deduction, they have $50,000 of taxable income. A visual aid that I really like is to imagine just an incredibly long dining room table, the longest one you can think of, and line up 50,000 $1 bills on that table. If you line up 50,000 $1 bills end to end, the first 11,600 bills, each of those get taxed at 10%. So next to each dollar, we're going to put down a dime. In the middle of the table, the largest chunk of money, all of that gets taxed at 12%. So we put down 12 cents next to each one of those dollars. At the very end of the table, the last, I think it's roughly $3,000, those dollars get taxed at 22%. So we put down 22 cents next to each one of those dollars. The US government walks down the table, it picks up all of those pennies and dimes and nickels and quarters, adds it all up, and that is your total tax bill. So these tax tables are published. If you want to sit down and do the math yourself to calculate your tax bill, you are welcome to. You will have my admiration. I will ask you to do mine afterwards. But if you don't want to do that math, the IRS publishes tables, and there's some calculators online you can use as well. Okay. All right, so once we have your tax due, then we get to start paying it off, the fun part. And this might happen in the form of certain tax credits, payments, or withholdings. So certain tax credits, for example, the Earned Income Tax Credit or the Child Tax Credit, these are credits that are applied to your tax bill. If you work a wage-earning job, you might have federal withholdings taken from your paycheck throughout the year. Those are also applied to this tax bill. Any additional payments you make, we also add up. And then at the end of the day, we compare. If your credits, if your withholdings, if your payments have wiped out your tax liability, you might get a refund. Alternatively, like in this example, there's still a little bit of tax owed at the end. That's when you write the IRS a check. So here's the summary of it. It goes from your total income to your adjusted gross income to your taxable income. Fun tax math is used to translate that to your tax bill, and then finally we pay that off through credits, payments, and withholdings. All right, does anyone have any questions about anything I've talked about so far?
This may be beyond the scope of this, but why are there different levels of like a certain amount of money being taxed at different rates?
Oh, sure, so that's a great question. Was everyone able to hear it, or should I repeat? Here, I'll let you, because I want to make sure I get it right.
Okay, my question was, why are there different tax rates on different amounts of money?
No, so it's a great question. So in the US, we have what's known as a progressive tax system. This just means that as you earn more money, that money is taxed at higher rates. And so it was a policy decision from the US government that people who had higher earnings would be taxed at higher rates on that earnings, while people who had lower earnings would pay less money on those earnings. Does that answer your question? Any other questions? Yeah.
The stock market earnings and investing in market and getting income off of stocks that you own. Some are long-term, some are short-term.
Yes. Do you want me just kind of to comment on?
Yeah. What is that all about? If my short-term is taxed at a different rate, I guess.
Yes, so the question was, what happens when you have what are called capital gains? Earnings you might have from stocks, from property, from other capital assets. How are those taxed, and why are there different rates? I do want to kind of be careful in my comments here because I'm limited in what I can say about preparing taxes. What I've shown here is kind of the underlying assumption is that this is income that you earn from wages. But there's lots of ways that people get income, including from selling stocks, property, things like that. Sometimes those earnings, in some situations, are considered capital gains. Capital gains can either be taxed as short-term capital gains, or they can be taxed as long-term capital gains. And the difference largely depends on how long you've held that asset when you sold it. And depending on when you sell it, you might pay a different tax rate. Does that answer your question? Okay, any other questions? All right, we can go ahead. Oh, sorry, yes?
Is a donation to your church considered a donation to charity?
So the question was about donations. To be honest, that's probably not something I can advise on. It's going to be dependent on specifics that I am not sure of.
I didn't hear you.
Oh, so just to make sure I got the question right, the question was, are donations to churches considered donations to charity? To be honest, that's going to be something that's really dependent on the specific donation and the church, and it's just very fact specific, so it's not something I think I can give you a blanket answer on.
Okay, but if you give to a fund like St. Jude's or Leukemia Society, I've always kept that separate, added them up for my tax preparer. But my donation to my church, which is quite large through the year, is as a separate.
And see, and that's going to be a question where I'm going to say your tax preparer is going to be the best advised on
But
how
I mean,
you should
am I getting that deduction though for my church is what I'm wondering.
Oh, no, and I
You
understand.
don't know?
I understand. When it comes to actually how people prepare their tax returns, that's something that I leave to the tax preparers because they're going to know in your situation how that's done and what are the specific rules for your church and your organization.
Okay, is there a standard deduction then for all donations to charities that you have to take instead of the separate?
Is there a standard deduction? Can
For-
you repeat that one more time, please? Oh, could you repeat that one more time, please? Is there a standard deduction
All right,
for?
didn't your tax preparer tell you that? Okay, Doris's tax preparer told her that they're no longer taking the itemized deductions for charity. Is there just a standard deductions for charities?
Oh, okay, so whether or not charitable deductions need to be itemized, or is there a way to take them if you're taking the standard deduction? I'm going to say that's probably going to be a question that a tax preparer is going to be best suited to answer. I apologize. I know that's not the most helpful answer, but tax preparers know the ins and outs and specifically how this applies to different situations in incredible detail.
Just a reminder, Nan is an attorney, a tax attorney. She is not an accountant or a financial person. So just as a reminder.
No, I apologize. I've taken exactly one semester of accounting in my life. I promise you, you do not want me answering your accounting questions. There are wonderful experts, though, who know this stuff in and out better than I ever will. On the flip side, if you want to know the basics of how to prepare an income statement for a fake company, I did that pretty well in a final exam. All right, we can go ahead one. All right, so I want to talk briefly about what are the things that we know are going to change in 2025, and then I'll talk about the things that might change in 2025. But let's start with the certain. So this year, the deadline to file your tax return, if you are required to file, is April 15th, 2025. If it is getting to April 10th, April 11th, April 12th, and you're required to file, and you realize you're going to need some extra time, you can request a 6-month extension. You file Form 4868. One thing to be very careful, though, about this is an extension to file. It's not an extension to pay. So when you go to file a tax return, the IRS is worried about two things. One, they want to make sure that you filed on time. And two, wholly separately, they want to make sure that you pay them all the money they're owed on time. So if you go and get this extension and it pushes your deadline back to file till fall, let's say I go file in June. I have filed on time. I got my extension, I filed in June, I'm good. But when I go file that tax return, if it turns out that I owe $200 at the end of the year, the IRS is going to say, well, Nan, we wanted that $200 on April 15th, so we may charge you interest and penalties between April 15th and when you actually pay. So something to be aware of. Also, if you file Missouri tax returns and you need an extension in certain circumstances, you also have to request an extension from Missouri. The final note that I want to make on this is about identity theft. The longer that you wait to file a tax return, the more opportunities you are giving someone else to commit fraud and to try and file a tax return using your information. Right now in my practice, I have a large docket of clients I'm working with on ID theft issues. It is a fixable problem, but it takes years to fix. The IRS is on, I think now, a 18-month, 2-year waiting list just to review the cases we're submitting. So definitely an area where an ounce of prevention, well worth a pound of cure. And so if you're going to file late, just be aware the risk of identity theft grows as you wait. Okay. We have new tax brackets this year, very exciting. The rates have stayed the same. You're still ranging from 10 to 37%. The amount of money that you are putting in those brackets, though, has changed slightly. So for example, you'll see at the first tax bracket, you can put, as a single filer, you can put about $600 more into the lowest tax bracket, and then those amounts change as you increase through the brackets. And then on the next slide, you'll see the same for individuals who are married filing jointly. Again, a little bit more money can go into that lower tax bracket than last year, and then the amounts change as you go through all the brackets. Let's see, we also have new standard deductions this year, very exciting. Individuals who are filing single can put about $800 more into their standard deduction. Parties who are married filing jointly can put about $1,500 more. And for our individuals who are considered seniors, if you are married or unmarried, there's an additional deduction you can take on your tax return. Okay. So this is the exciting one this year. I'm not sure how many of you spend as much time reading tax blogs as I do spend reading tax blogs, but everyone has been writing about this for about 9 months, and then the IRS finally told us what they were going to do. So when you go to file tax returns, as I'm sure many of you know, normally in the months leading up to it, you've got sent a lot of mail. You get your W-2s, your 1099s, you might get documents from your health insurance agency, your bank, everyone's sending you all these forms. One of the forms that you might get this year is a Form 1099-K. This is a form that you use to report income from payment apps or online marketplaces. So for example, taxpayers who sell handmade goods on Etsy, they're selling knitted goods or like wood carving, those types of things on Etsy. They are selling on an online marketplace. Taxpayers who have a small business and operate at a farmer's market and they accept payment at that market through PayPal, they're receiving income through payment apps. So the IRS wants more reporting on these payments. It used to be that to get one of these forms sent to you, you had to both have more than 200 transactions in the year, and those transactions had to total to over $20,000. A few years ago, Congress passed the American Rescue Plan Act. If you all remember this bill, it is absolutely massive. It covers huge topics in the U.S. Policy. But one part of it touched on this form, and they wanted to both get rid of the minimum transaction requirement and reduce the dollar amount from $20,000 to $600. The IRS wants a lot more granular information on these taxpayers. So they passed this bill. The IRS did not decide to implement it overnight. They're going to phase it in, and this is the first year of the phase-in. So this year, taxpayers who, through online marketplaces or payment apps, received more than $5,000, they are going to receive a Form 1099-K for the first time, and eventually they'll work their way up to the $600 limit. So we're all watching to see how this goes, to see how taxpayers react when they get these, how the IRS handles it, how the online payment apps and the marketplaces handle this. So just something to kind of keep your eyes out for, and if you or anyone you know operates these type of businesses, might be interested to kind of keep a lookout to see whether or not you get one of these forms in the mail and go from there. Okay. The other one I want to bring up is the COLA increase for Social Security was announced. It is a 2.5% cost of living adjustment for 2025. The Social Security Administration thinks that'll be average out to about $50 per taxpayer. Parties who receive Social Security will begin receiving these payments in January of this year. If anyone received SSI, those should have begun kicking in December 31st of 2024. Okay. Any questions about the things that we know are going to change before we get into the things that might change? Okay. All right, so let's talk about the big upcoming tax debate that is going to be dominating my news feeds for the next 12 months. All right, so to get into this, we need to talk a little bit about the Tax Cuts and Jobs Act, technically called the Act to Provide for the Reconciliation pursuant to our Titles 2 and 5 of the Concurrent Resolution for the Budget of Fiscal Year 2018. That name is not that catchy, so we call it the Tax Cuts and Jobs Act, or sometimes the TCJA. This was a major overhaul of tax rates that was signed into law in 2017. However, many of these provisions are going to sunset this year in 2025, and that is what we are going to talk about a little bit. The other thing you need to know about the Tax Cuts and Jobs Act is that it was passed through the budget reconciliation process, and I want to talk about that in a little more detail. So reconciliation is a procedural maneuver that Congress can use to pass legislation more easily. In other words, it's just a procedural shortcut. It makes it a little bit easier for them to pass this legislation. The main benefit of going through reconciliation is that it removes the Senate filibuster. So typically when a bill is going through the Senate has to invoke cloture, in other words, end debate, and you need 60 votes to end debate. You don't need that with reconciliation. You only need 50 votes and then the vice president to come in and break the tie. Or if the vice president won't break the tie, 51 votes. The cost, though, of going through reconciliation is that these bills have a very limited scope. They can only handle taxes, certain types of federal spending, and the debt ceiling. they're also subject to a lot of rules and procedural requirements. One of them, named for Senator Byrd, has many parts, but the one I put up here I want to focus on is the Byrd rule, that you're not allowed to increase the deficit after a certain period of time. It's called the budget window. For the Tax Cuts and Jobs Act, that was 10 years, so you couldn't increase the deficit after the 10-year period had expired. Reconciliation also leads to my personal favorite Senate event that happens, and it is called a vote-a-rama. So when you're going through reconciliation, the Senate can only debate for 20 hours. But even after that debate clock has run, senators can still propose amendments. And before you are allowed to vote the bill out of the Senate, all of the amendments have to be disposed of, or in other words, voted on. There's no debate, but each senator comes up, they introduce the amendment, and then there's a 10-minute vote. Senators in advance of this will file up to 1,000 amendments. Not all 1,000 will hit the floor, but several dozen do. And then the Senate, in effect, just pulls an all-nighter, and they just vote all night on all of these amendments until finally the senators have had enough. They did this in 2022. The vote-a-rama went for 16 straight hours, starting in an evening, going all night into the next morning until they finally had enough and they stopped voting on these amendments. The photo I put up here, this is a staffer heading into Congress carrying, I'm not sure if you can see it, but I'm pretty sure that's a box of energy drinks, headed in to spend the night watching the senators take hundreds of votes on all of these amendments. Okay. Yes?
If they never come to a conclusion, is that a problem? Or
So what happens when there's not a consensus reached at the end of those 20 hours of debate? So the 20 hours is the clock on debate. At that point, senators can no longer come to the floor, make their big speeches, and discuss the matter on the floor. And so at that point, you're then kind of looking at your party, and do I have the votes to go forwards?
Oh, okay.
It is. The Senate procedural anachronisms are just lead to some of the most weirdest ways that we handle these issues sometimes. I always find them interesting. The other thing that you should be aware of related to the Tax Cuts and Jobs Act does not have to do with reconciliation, but I do want you to know Congress had passed a resolution saying that this bill couldn't increase the deficit by more than $1.5 trillion. So there's two spending limits we're working with. They can't increase the deficit after 10 years, and the total increase of deficit can't be more than 1.5 trillion. And that leads to the Senate having to balance the bill. So Tax Cuts and Jobs Act affected a lot of things. It affected individual taxes, business taxes, estate taxes, and health insurance. And so they had to, as they were going through this process, they had to make some compromises. One of the key compromises at the heart of this bill is that many of the provisions affecting individual taxpayers and families would expire in 2025. Certain business provisions would expire between 25 and 28, and certain provisions would stay permanent. So, as tends to happen sometimes with Congress, in 2017, they thought, yeah, we'll just kick that can down the road to 2025. And now we're sitting here in 2025. And the question is, what are they going to do? Is Congress going to extend the individual provisions? Are they going to extend the family provisions? Are they going to extend the business provisions? And what's that going to look like if they do? There's an office in the federal government called the Congressional Budget Office. It's often abbreviated as the CBO. Their job is to score bills, or in other words, they're fantastic economists who sit down and they try and figure out how much a piece of legislation is going to cost over a given period of time. They have scored and they've provided estimates for what it will cost to extend the Tax Cuts and Jobs Act for another 10 years, and they think it's going to be a little under $5 trillion. I put this image up here. This shows in red the things that are going to cost money, and the things in blue what will save money. So the greatest cost will be continuing to lower the tax rates. I think that is, yes, $2.2 trillion just for that one provision. On the other side, removing the personal exemption will save about $1.7 trillion. So this is where the math stands now, and we're going to kind of get to see what Congress decides to do with it. So if you go to the next slide, you can see this is what the rates will look like next year in 2026 if the Tax Cuts and Jobs Act is extended versus what will happen if it is allowed to expire. You'll see that the actual rates themselves change. The top rate goes from 37% to 39.6%, and the amount of money that falls into each one of these brackets will also change. On the next slide, you can see the effect on the family provisions. So Tax Cuts and Jobs Act affected a lot of tax credits and provisions for individuals. It included things like drastically increasing the standard deduction at the expense, though, of removing the personal exemption. It also doubled the child tax credit from $1,000 to a maximum of $2,000 and increased eligibility so that more higher income individuals would be able to benefit from the credit. Also added additional deductions for other dependents. So again, this is what is happening now. This is what might change if it expires. So we're going to see what happens next. All right. So things to look out for this year. The big one, what's happening with Tax Cuts and Jobs Act? What is going to happen? Are they going to extend it? If they extend it, is it going to go through reconciliation, or will enough minority party members join the majority party so that they can use the traditional schoolhouse rock method of passing bills? There also is questions about what other tax-related changes might come this year. We just finished a presidential election, and both parties spoke extensively about what they would like to see changed in the tax code if their party is put in power. One of the examples I put on here, both sides supported, was a no tax on tips. Is that actually going to be implemented? If so, what would that look like? How would we structure that, and what would be the effects to deficit? The last little flag I'm going to put on here is that the government is only funded for another 4 weeks. They have funding through March 12th, I believe. So just another fun thing to keep an eye on is what happens in March as they try to decide if and how to continue to fund the government. Okay. Any questions about any of this? All right. Yeah.
A fixed income tax, anything like that? I know years ago I've heard people think about trying to get rid of all the detail there.
Yes, yes. So the question was, is there talk now about fixed income taxes? The answer generally is when you're coming to taxes, there's always someone somewhere who's talking. Almost every provision has at least one supporter. Because I do remember a few years ago there was, I don't remember the details, but there was a candidate who was promoting a single tax rate.
Right.
I can't say, with any expertise about what they're going to do with any of this.
Right.
But when it comes to has someone proposed, X, Y, or Z idea, when it comes to taxes, I feel like every idea under the sun is represented by at least one person.
Gotcha. Okay. It's a lot of detail in there, so I mean, you can eliminate some of that discussion.
I know. I mean, see, imagine if doing taxes, I just stood up here and I'm like, here's your number, multiply it by this number, send in your check. But then what would I do all day? It would be less fun for me. All right. Any other questions? Okay. All right. The last thing that I wanted to talk about before we open up the floor more generally is tax scams. We are getting into filing season, which is always a time where we want to be particularly cautious about scammers. So there are 4 things here, some signs to be aware of. The first one is that scammers might tend to impersonate government officials, and this can include spoofing their caller ID so that it looks like a call is coming from a legitimate source even when it's not. Scammers may target their victims and contact them and tell them there's something wrong with their account. We need you to verify that this account is really yours. Can you give me your social? Can you give me your date of birth? Alternatively, congratulations, we found money that we owe to you. You won a prize. We need you to pay this fee to collect, or we need you to pay the taxes on it to collect this prize. Can you give me your credit card information? Scam artists tend to want people to take quick action. They want you to do something right now before victims have the opportunity to ask questions, to think something through, to do a little bit more research. They want you to go and they want you to act without thinking. They may do this by threatening arrest, by threatening deportation, saying there's a computer virus that's on your machine and you need to do this right now. Again, they're trying to make sure that people can't think something through. The last one, scammers want money in the weirdest ways. They want it on a prepaid gift card, on a prepaid debit card, in cryptocurrency, sent via social media. Very unusual forms of payment. So one of the most important things is to be able to identify when the party contacting you actually is the IRS or when it is a malicious party. So a few things to look out for. Some signs that it is the IRS. The IRS tends to contact taxpayers for the first time through regular US mail. The IRS is only ever going to text you if you give them permission to text you. And finally, if anyone is in person claiming to be from the IRS issues all of their employees credentials, or for those that are law enforcement officers, they will have law enforcement credentials. On the other side, the IRS is never going to contact you through social media. The IRS is also never going to accept payment by gift card or prepaid debit card. The IRS is also never going to request money from you and demand that you pay immediately without giving you the chance to dispute. I have this chart in my office that was made by the Taxpayer Advocate Service that shows the process of a tax case through the system. The tax court system and the tax system in general is incredibly complicated. There's lots of opportunities for taxpayers to dispute what they owe, to go through an appeals process, to seek further information, and that's something that the IRS will give you. Alternatively, the IRS is not going to threaten to call law enforcement. They are not going to threaten to call immigration officials on you. And the IRS is not going to leave pre-recorded voicemails or robocalls. So if you go to the next slide here and let me know if it works. I have saved here a voicemail that I got from someone claiming to be from the Social Security Administration. It's only about a minute long. If you click on it, can we see if it'll play? Oh, there you go. It'll start over.
We regret to inform you that this case is critical and time sensitive. It requires your urgent attention as a criminal case can be registered on your name. If you do not want to get arrested, press 1 to speak to the officer. We regret to
Sorry.
inform you that
Oh, here, you can stop it. I apologize. Sorry about that. I'll speak quickly. It looks like it got cut off at the beginning. Someone claims to be from the Social Security Administration. They say you need to call immediately. But this was a voicemail that just got left on. Yeah, here we go. That's what it is. Okay. Here, if you want to skip to the next slide, I'll talk without the visuals on it, just to stop the wonderful loop. But this was a voicemail. It came to my cell phone. There was a period of time where someone had my cell phone number, and I was getting calls like this once a week. But this particular call, it's someone claiming to be from the Social Security Administration. They say that there's fraud on my account, and they're going to suspend my Social Security number within the next 24 hours, and then I need to press 1 to speak to someone now to avoid being harassed and to avoid them taking drastic action. So 3 things to look out for. 1, it's someone calling, claiming to be from a government official from a phone number I don't recognize. 2, they want me to do something right now. They say you need to take immediate action. And 3, they're threatening drastic consequences. We're going to suspend your Social Security number if you don't act. So those 3 things sound somewhat suspicious. If you got a voicemail like this and you weren't sure if it was real or not, a couple things to do. 1, I recommend if you're able to look online. This example is from the Social Security Administration, but also the IRS. They regularly post online when they have fraud or scams. They're offering advice to individuals, and so sometimes you can find information about whether or not something is a common scam. You can also call the IRS. This is the IRS's phone number, 800-829-1040, ends in 1040. They're available 7 a.m. to 7 p.m., Monday to Friday. I call them almost every day. They tend to be very friendly, and they'll be able to help you figure out whether or not this is a legitimate notice that you've received. So I put an example here. This is what I might have typed into Google, Social Security Administration. I got a voicemail. They're going to suspend my Social Security number. One of the first thing that pops up is this web page from the Social Security Administration. Here, and if you click through one more time, yeah, So I'm not sure if you can read the URL, but this is ssa.gov/scams. And they're warning you of things that the Social Security Administration will never do. We will never suspend your Social Security number. So that's a good indication that this is something that's not real. Would you mind going forward one? In a slightly harder example, so in our clinic this month, we have had 3 different taxpayers walk in who have gotten letters remarkably similar to this one here. This is an example I pulled off online. It's from Alaska. Our taxpayers had slightly different ones. But this is a letter from someone claiming to be from the Internal Processing Service. They're saying that your property is going to be seized because you have not paid taxes to the state of Alaska, and you need to call this number by this date to avoid having your property be seized. Again, I think we've had 3 of these come in this month. It's a pretty common scam, unfortunately, but these letters, they look good. They did a good job making these. Would you mind clicking through? I think I highlighted a couple things on this letter. Yes, so they say they're from the Internal Processing Service, which is just close enough to the Internal Revenue Service, the IRS, that if you're reading quickly, you might not catch that. It's again threatening drastic action. Your property is going to be seized. We're going to take your home. And it's asking for pretty immediate action. You need to call this number, and you need to talk to someone now to get this figured out. Here, if you go forward one more, here's this another letter of the same style. This one's from New York. Again, they look legitimate. There's a form number in the upper left-hand corner. There's a seal that, if you're not looking too closely, looks like a legitimate seal. And again, it's trying to scare you. It's trying to say, we're going to take your home. You need to act now to avoid this drastic consequence. Again, so I did a little bit of online research trying to figure out, okay, if I was someone, I got this letter, how would I know whether or not this is real? And the IRS had a webpage up about this exact scam. It's this property lien scam where someone is sending you a letter in the mail. They say that they're from an organization that sounds legitimate. I think on here it's the Bureau of Tax Enforcement. It is the internal processing system. And they are looking for you to pay money to avoid having a lien on your property. So again, I say this not to scare everyone, but just to make you aware that particularly when we're in tax filing season, just be cautious. If something sounds drastic, it needs to happen now, it's worth taking a moment, calling someone, doing a little bit of research, seeing if you can make a determination about whether or not this is a legitimate letter or if this is someone trying to take advantage of you. Okay, yeah.
Those letters that come in, you can give that information to IRS in writing, what you got? Is that evidence of what happened, and will they trace that somehow, some other way to find out?
Okay, so kind of question, so if someone comes in with a scam notice, is it able to get traced to the IRS, or how does that happen? So I need to check. I think both of these letters that I pulled were from State Attorney General's office that had published them and was talking about the scam. I can double check and make sure. It's the IRS who then kind of published this more broad information. I'm trying to think, I'm trying to think, what did we do with the letters? Let me check and see. I don't know. I want to make sure that I get that right about what's kind of our procedure if someone walks in with a letter like this. But no, unfortunately, we see a not small number of taxpayers who come in either because they've received something like this and they don't know if it's real, or in some situations, taxpayers who have already taken action about a scam thinking it's real, and they want to know what can we do to help them get out of the situation. Any other questions?
Yeah. If one doesn't qualify because they make too much money or have too much income, do you have resources for referrals of attorneys that might take their case or be of use?
Okay, so are we able to make referrals for clients who don't meet our requirements? In many situations, in many situations we can't make referrals to private attorneys. I'm trying to think of what are the other. Is there any others that I should be recommending? No, at least as far as I'm aware, unfortunately, we can't refer people out to a private source.
If we came into your clinic, would you require, past tax returns to see if we qualify, or how does it work?
Yeah, absolutely. So thank you actually for this because I forgot to mention. Out front at the sign-in table, I put our flyers. They tell a little bit more information about what we do. On the front side is our phone number and our main website. If you were to go to that website or if you were to call that phone number, you would get our front desk. The phone would likely be answered by Jen, who is my favorite human that exists on this planet, and she would do a brief intake with you. So she would go through and ask some questions. You know, what's your name? What's your phone number? What's your situation? You know, what are you calling? How can we help you? And then she passes that information on to one of the attorneys in the office. You would then get a call from one of us, and we would have a longer, in-depth conversation with you, trying to understand what is the situation, what happened, gathering facts, gathering details. As part of that, we might also request that you submit some documents to us. We have a secure online portal that we use to gather documents. We also sometimes have taxpayers come in person and bring documents, and from there we we review the information, review what we have, and are able to make determinations from there.
Are you located on the main campus or on a satellite location?
So we are located at the Washington University Law School. We are on the first level in the main, it's on the main campus, right at the intersection of Forest Park Parkway and Big Bend. We do work, though, with taxpayers across the region, including many people who don't live in the St. Louis area, and sometimes not even in Missouri. So we are able to work with taxpayers who might not be able to come in person to our clinic. Just depends on the situation. All right, are there any questions that I can answer for anyone about anything we've talked about so far? I'm also happy to stick around a little bit at the end if anyone wants to come up and ask questions. Okay. Oh, yeah.
Just with these 1099 Rs and that kind of stuff coming in through the mail, if you don't get one, can you still file a return?
So what happens if you are expecting a form but you don't receive the form? It's a good question. There's procedures online for the IRS about what you should do in those situations. Most likely the answer is some combination of contact the party that you think is going to send you the form. Sometimes things get lost in the mail. Sometimes, things just don't reach the final destination. Sometimes the IRS also has dates about when those forms need to be sent out. So sometimes the answer is just wait a little bit longer. But the best thing to do is to check the IRS website for the particular form you're waiting on and see what they recommend going forwards.
Any other questions?
All right, thank you all so much. I really appreciate it.
Well, thank you, Nan. I appreciate you coming out. Lunch is downstairs. The elevator's right there, or if you need to get your steps in, it's at the end of the hall. Thanks for coming.
Thank you all so much. Appreciate it. Do you want me to put the Bible back on the table for you? Sure. Yes, please. Beautiful coffee. This is there's our ribbon. Here we go. That's where I had it, and I'll steal my pencil.